Our market mavens today, Drew Canale, chairman of Canale Trust Company, and Bill Buechler, president of Barclays Partners Asset Management. Nice to have you both with us. Pleasure to have you here. Bill, let me start with you. You're both generally bullish on this market. What are the underpinnings that you see enabling the market to continue what seems to be a daily march to a new record?
Well, I think as long as the Federal Reserve continues to supply the liquidity and we still have the big private equity players out there waiting for more opportunities, I don't see any other way but for the market to continue to trend higher.
Bill, Drew, do you agree?
We do agree. It's good Fed policy, it's good tax policy, good regulatory policy, and good trade policy. These are the drivers that have gotten us to this point. They're all still in place, so we see the market going higher.
Bill, and I'll ask the same question of you, Drew, whether either one of you are taking profits, taking some money off the table, because there are those who say that the market's been marching higher in small increments, albeit, but to new records on a daily basis, and at some point we need a little bit more of a correction. Bill, you first.
Well, I think when we do have the correction, it's going to be sharper and more difficult than we're used to dealing with, but I think now's the time, really, to change and focus on some of these natural resource stocks, and in particular to look overseas. I think the best opportunities are overseas, and you're seeing the big private equity moves go to overseas with the Canadian stock today, and last week the British and Dutch stocks. So I think you want to look overseas as the real opportunities here.
Okay. Drew, what about you?
Well, a balanced investor, hopefully they've been a little overweighted in stocks the past few years, and it's probably time for them to start thinking about getting back to their midpoint where they started all this. But they've got to be careful because there's a better than even chance we're going to see a Fed rate cut maybe as early as August or September of this year, and I think that'd be a real surprise to the market on the upside.
What would trigger a rate cut?
Well, what you've got right now, if you follow the 91-day T-bill, it's trading at about 485, 486, and typically the Fed follows the T-bill, and the T-bill's been trading below Fed funds for quite some time. And probably the drivers behind the Fed's thinking at this point will be if housing continues to be soft and if maybe more unemployment numbers come in less favorably in retail, they're going to want to respond, and the T-bill's pointing the direction.
Bill, as I understand it, you expect the Fed to hold pat.
I do. I think that the Federal Reserve will err on the side of growth, but I think their idea going through this whole year basically is let the market do the work, and there'll be times where people are looking for a rate cut, and then there'll be times for a rate hike. But in the end, I think they're going to go through the entire year doing nothing and staying status quo. And
if they do that, I mean, does the Fed matter at all to the markets at this point, Drew?
Yes, it certainly matters. I think they're all listening for the marginal language coming up in this week's FOMC report. And I think they're going to be looking for the Fed to do something if you see any more softness in our domestic economy.
Gentlemen, thank you. Pleasure to have you here, Drew and Bill.
Thank you.
We'll talk to you soon.